Okay, guys. As I mentioned before, the financial statements get you to really understand the heartbeat of your business and they get you to make more informed decisions. You don't want to be spending too much time generating your financial statements. So I'm going to have a quick little run through today of what you need to do in order to have clean and accurate financial statements. So let me go through the financial statements again. I'm just going to do the profit and loss and the balance sheet today. I'm just going to also give you an overview of the cash flow statement, but I'm not going to go through how about doing the cash flow statement because you won't be actually doing that exercise. Okay. So the first off is the profit and loss statement. Okay. So the profit and loss statement, what it pretty much is your income minus your expenses is equal to profit. Okay. And your income, what it includes is all your sales that you make from your, doing business. Of course, you're in business and you're doing sales, you're doing revenue, you have consulting income, you're selling products online, you're selling products in a brick and mortar store, or you're providing your services in person, whatever the case may be. Those are your sales. This is your revenue. And this is where it goes into your profit and loss statement under the income or revenue portion. This also includes investment income. So if you have extra money and you've placed that in an investment and it's generating passive income, interest income, dividend income, etc., those would go in there. Capital gains as well can go in there. And any other type of income that you receive would also go in there. Next are your expenses. Your expenses are your current expenses. That means the expenses that you incur during the current year for the current period. So those could be travel expenses, includes depreciation, also the income tax for the year, meals and entertainment expenses. You also anything that you pretty much you you spend in order to make money, you would need to include that there. Even if your office expenses, if you're working from home, part of your home expenses as well, they would go in there. And the remaining is your profit or your loss. So if your expenses exceed your income, you have a loss and it reduces your owner's equity. And if your income exceeds your expenses, obviously you have a profit. Note that the expenses can also include your management salary. As the owner, if you want to take a salary, you can also include that in your expenses to give a better picture of your profits. Next comes the balance sheet. The balance sheet is assets minus liabilities equals equity. Okay, so assets is pretty much what you own. Your equipment, your receivables, your cash, etc. So everything that you own. Okay, so bank, cash, equipment, inventory, receivables, prepaids, anything that, you pretty much will help you generate money, right? So it's an asset for you, you own it, and this will actually help you generate money. So the cash in the bank, you use that money to pay your employers who actually provide you a service and generate income. Your equipment, you use them in order to generate revenue. Inventory, you sell it at a profit. Your receivables, it's pretty much your income. Okay. Liabilities are your creditors, so payables. If you owe money to the bank, overdraft, credit cards. So those are all items that the business owes. So you owe this the amount owing on your credit card back to the bank. You owe the loan balance back to the bank. You owe the amount from that invoice to Fido, to Rogers, whoever the supplier may be. And also in your liabilities, if you have any taxes payable, those would also in there. And your equity. Your equity are any shareholder investments. So if you buy shares in the company, that goes into equity. Shareholder draws. So if you're taking dividends or just taking the capital out of the company, this goes into the equity plus profit for all years. So that's how the income statement comes into the balance sheet. So part of your income statement is actually in your balance sheet, and the balance sheet gives you the financial position of your whole business at a particular date. So December 31st, how much money did you make? How much money did you invest? How much money did you take out? That's your equity. And that actually equals to everything that you own minus everything that you owe. So this is how it comes into play. What you own minus what you owe is your equity. And your equity is actually everything that you've invested and withdrawn, plus your profit that your business has generated for all years. Another important item is the cash flow. Cash flow is important for you to see how cash is flowing with the business. So you might have, a healthy profit, but if your cash is low because your receivables are very high and they are not good because, they likely not going to pay or whatnot, then you're in a bad situation, right? So that's what the cash flow will tell you, whether the cash is flowing within your business, and you have what it takes in order to run the business. Okay. Now you may be wondering, okay, how do I get everything done, right? The bottom line is you need to have a good bookkeeping system. Okay. And QuickBooks Online is what I offer to all my clients, and I actually offer them a discount through our firm than the actual retail price. QuickBooks Online provides you information to download your bank feeds, so all your transactions are downloaded automatically, and you just click and say, okay, this is the expense, this is the income, this is the asset, this is the liability, this is the equity, right? And then QuickBooks will just generate those statements for you. So it is important when you are going when you're setting up your receivables, that you set up your accounts properly as assets, liabilities, income, expenses, or equity. Those are the 5 main types of accounts that you need to be setting up. And if you're trying to get your books done yourself, you have to understand these 5 concepts in order to be able to generate those statements properly. Okay. I'm just going to quickly show you QuickBooks Online, and here's a sample company for QuickBooks Online, and you would see that it makes it very easy to categorize your transactions and actually get things done very quickly. So as I mentioned, QuickBooks will download all your items from your bank account, and you will be able to see all the transactions in QuickBooks and tell us exactly what those transactions are for. So for example, there was an ATM deposit on June 3rd. This transaction, we can say either it's a deposit for the sales or income services, and what the tax rate is, etc. You would just categorize those transactions, even those as expenses as well. You would categorize this as travel expenses, whatever the case may be, and track the taxes if you have the taxes as well. It's going to track everything for you. And then once you put in all your transactions, you just go in here and just generate your balance sheet and see exactly how you've performed for whatever period you're looking for. So if you're very serious about your business, you need to be able to get a bookkeeping system in place. You don't necessarily have to get a bookkeeper. You can do most of the transactions yourself. However, you need to do it consistently. You need to do it periodically so that, when it comes to your year end, your accountant, or if you're doing it yourself, you're not spending too much time wriggling around and trying to figure things out and make things right. Right. So get a good bookkeeping system in place. QuickBooks Online is the leading software for in North America for small businesses. We do offer a discount if you get it through us. Through that discount as well, you actually get some free guidance to make sure that your chart of account is set up properly, and you would have access to our services on a discounted basis. So get serious about getting your administration straight on your bookkeeping, your accounting, and minimize your taxes, see the light at the end of the tunnel, make informed decisions, and improve your cash flow. All right. I hope this was informative, and we'll see you next time.